It was a brutal day on Wall Street yesterday as stocks plunged to the worst numbers we've seen since 2022. Overseas markets are reacting as well, with Asian benchmarks also down this morning. Yesterday, the Dow Jones ended 890 points down. S&P dropped by 155. The NASDAQ sank by 727. So what does it all mean for you and the economy? To break it all down is Bankrate Senior Industry Analyst Ted Rossman. Thanks for joining us, Ted.
Of course. Thanks for having me.
Question on everyone's mind after the stock tumbled yesterday. Could we be headed into a recession?
Most economists still believe no. Goldman Sachs only puts the odds around 20%. This is more of a blip on the radar. This is not something to be concerned about for the average household. Just to put it in a little bit of context, I know the market was down a lot yesterday, but if we look at the S&P 500 as kind of a proxy for the market, 500 large U.S. stocks, it's down 4% year to date, but it's actually up 1% over the past 6 months. It's actually up about 10% over the past 12 months. This is more short-term volatility, not something that's going to change your long-term plan.
There is more economic data coming out this week, including the Consumer Price Index tomorrow. How much will these numbers factor into the market, do you think?
The Consumer Price Index is a widely viewed measure of inflation, so that's important in the broader context about where a price is going, and also what does it mean for the Federal Reserve. They've been starting to dial back interest rates a little bit. If inflation continues to come down, they can continue to do that. So that would be good news for people with credit card debt or those looking for mortgages and things like that. Honestly, though, a lot of what's driving the market news these days is political. It's not all the usual economic data. A lot of the data is pretty good, actually. It's all about tariffs. It's all about uncertainty. A lot of the tea leaves that investors are reading these days are coming out of the White House.
And stocks plummeting sets off fear for people with investments. What would you advise they do at this moment?
Just stay the course with your long-term investments. Keep contributing to the 401k. We know there's going to be volatility in the stock market. We know there's going to be ups and downs, but over the long haul, the market has been quite the wealth creator. So just make sure that you're appropriately risk allocated. If you're young, you have decades till retirement, you have tons of time to ride it out. This is one of the reasons why as we age, we get a bit more conservative with our investments, but this is really part of the normal business cycle. A lot of it's just a readjustment with a lot of the talk coming out of DC about changes to the federal workforce, tariffs. It's more short-term volatility pegged to that.
Ted Rossman, Senior Industry Analyst for Bankrate. Thanks so much for breaking this down for us. We appreciate it.
No problem. Thanks.